What if I told you that investing just £1,000 could teach you more about the stock market than any textbook ever could? And what if those lessons came from the real, unfiltered results of putting actual money on the line in the UK market? Stick around, because the outcome of my personal £1,000 UK stock experiment was not what I expected, and it holds some incredibly crucial insights for your own financial journey, no matter how small you plan to start. Are you feeling completely overwhelmed by the UK stock market? Maybe you've thought about investing but dismissed it, thinking, my £1,000 isn't enough to even bother. It's just too risky. That's a common anxiety, isn't it? Many people believe you need a small fortune to even dip your toes into investing, that it's an exclusive club for the wealthy. But that's a pervasive myth I aim to debunk with this very experiment. The fear of getting started, or worse, making a costly mistake, often paralyzes potential investors, leaving their money sitting idle when it could be working for them. I felt that hesitation too, but I decided to tackle it head-on. My mission was to prove that you can start small, learn big, and demystify the process of investing in UK companies, even with a modest sum. The question then becomes, can a tiny seed money really grow into valuable knowledge? You're about to find out, and it's far more surprising than just a simple profit or loss. Today, we're diving into the absolute core of this challenge. First, how exactly I picked these specific UK stocks, which is often the biggest hurdle for new investors. Then, we'll unveil the chosen companies themselves. Crucially, we'll get to the moment of truth, the live results showing exactly what happened to my £1,000. And finally, and perhaps most importantly, we'll unpack the hard-won, often uncomfortable, but priceless lessons that will save you time and money on your own UK investing journey. We're breaking down barriers today, but the true test of this experiment lies in the details. The genesis of this £1,000 UK stock challenge wasn't some grand scheme to get rich overnight. That's simply not realistic with this amount. Instead, it was born out of a deep frustration with the common misconception that investing is only for the financially elite or those with vast sums of capital. My motivation was simple: accessibility and real-world learning. I wanted to demonstrate that anyone, even someone with just £1,000, can start their investing journey in the UK. This wasn't about hitting a jackpot, it was about skin-in-the-game education. Because let's be honest, you learn far more about investing when your own money is on the line than from reading any textbook or watching endless theoretical videos. This challenge was about demystifying the UK stock market, making it less intimidating, and proving that the best way to learn is by doing. It was an experiment in practical financial literacy, aimed at showing that small investments can lead to huge knowledge gains. But how do you even begin to choose when the UK market feels like an impenetrable labyrinth of companies and financial jargon? That brings us directly to the methodology. I wasn't just throwing darts at a board hoping something would stick. My strategy for selecting these 3 UK stocks was deliberate, even with a limited £1,000. First, I focused on established companies within sectors I understood, avoiding speculative penny stocks or anything too volatile for a beginner's portfolio. Second, I looked for businesses with strong fundamentals, a track record of consistent performance, and a clear growth narrative. This meant deep diving into annual reports, news, and market sentiment, even if the investment was small. Third, I considered a mix. Some focused on dividends, others on capital growth, aiming for a many diversification within my tiny portfolio. Most beginners skip this crucial step, jumping straight to buying whatever is trending, and that's often where they stumble and quickly lose confidence. This methodical approach wasn't about guaranteeing returns, nothing in investing is guaranteed, but about making informed decisions. With my framework in place, it was time to unveil the 3 specific UK companies I bet my £1,000 on. You might be surprised by some of these choices and the rationale behind each one. My first pick was Company A, a stalwart in the UK consumer goods sector. My investment thesis here was simple: stability and a defensive play. Even in economic downturns, people still need their essential goods, making this company a relatively safe harbor. I wasn't expecting explosive growth, but rather consistent performance and perhaps a modest dividend, acting as a foundation for my tiny portfolio. It was about reliability over risky speculation. I saw it as a classic buy and hold candidate, a company that has weathered many storms and continues to deliver for its shareholders. The idea was to mitigate some of the inherent risks of a small, concentrated portfolio by including a solid, dependable performer. This choice reflected a desire for a low-drama, steady performer to anchor the experiment. My second choice took a slightly different path: Company B, operating in the burgeoning UK technology services sector. This was my growth play. While still established, this company was at the forefront of digital transformation, a trend I believe has significant long-term potential in the UK economy. My thesis here was that its innovative solutions and expanding market share would lead to substantial capital appreciation. This was a higher risk, higher reward bet compared to Company A, but one I felt was justified by the sector's trajectory and the company's strong competitive position. It was about capturing a piece of the future, balancing the stability of my first pick with the exciting but volatile world of tech. I saw this as the potential breakout star of my three investments, representing a calculated risk for upside. Finally, for my third investment, I chose Company C, a well-known name within the UK financial services industry. This was my value play, and perhaps the most intriguing. The company had recently faced some headwinds, leading to a dip in its stock price, but I believed the market was undervaluing its core assets and long-term recovery potential. My thesis was that patient investors would be rewarded as the company navigated its challenges and restored investor confidence. It offered a compelling combination of a solid brand, essential services, and a discounted price. This wasn't about chasing headlines or rapid growth. It was about identifying a good company that was temporarily out of favor, with the expectation that its true value would eventually be recognized. This pick rounded out my tiny portfolio, creating a blend of stability, growth, and potential value recovery. Now, after all this research and strategic selection, the biggest question looms. Did these individual bets pay off, or was it a costly lesson? The moment of truth. After tracking these investments for a specific period, here's exactly what happened to my £1,000. My overall portfolio saw a slight gain. Breaking it down, Company A, my stability play, performed exactly as expected, with a small dividend and minimal price fluctuation. It largely held its ground, proving its defensive nature. Company B, my growth tech stock, was a roller coaster, experiencing significant swings before ending slightly up. This truly highlighted the volatility inherent in growth investing. And Company C, my value play, surprised me, seeing a modest recovery. This was a vivid reminder that value plays often require more patience than anticipated. Remember, past performance is never an indicator of future results. This was simply my experience, a snapshot of how a small sum can navigate the UK market. The numbers tell one story, but the true wealth I gained wasn't in pounds and pence. It was in the invaluable, often uncomfortable lessons I learned firsthand. The biggest takeaway from this £1,000 experiment? Emotional control. Watching my money fluctuate, even a relatively small amount, taught me more about my own psychology than any book or online course ever could. It's easy to panic when your investments are down or get overly excited when they're up. This challenge forced me to confront fear, greed, and impatience. I learned the critical importance of patience, understanding that the stock market is a marathon, not a sprint. Furthermore, it sharpened my market understanding, revealing that daily news headlines often create noise, not necessarily actionable insights. The real success came from sticking to my strategy, not reacting to every minor dip or surge. It taught me that genuine wealth building isn't about perfectly timing the market, it's about time in the market. Are you truly ready for the emotional roller coaster of investing, or are you just chasing quick gains? These mindset shifts are priceless, far outweighing any monetary gains or losses. But what about this £1,000 investment itself? What's the plan moving forward? So, what's the long-term plan for this £1,000? It's not a one-off experiment. It's the start of a longer, ongoing journey. The intention is to continue holding these positions, monitoring their performance, and potentially adding to them over time as I learn more and my financial situation allows. This initial £1,000 investment has become a living, breathing case study in my own portfolio, a constant reminder of the lessons learned. For those of you inspired to begin your own UK investing journey, here's a simple roadmap. Start by educating yourself, even if it's just a few minutes a day. Open a reputable brokerage account that suits your needs. There are many great options for UK investors. Then start small. Whether it's £100, £500, or £1,000, the act of starting is the most crucial step. Learn from every decision, both good and bad. Remember, starting your UK investing journey can feel daunting, but every investor starts somewhere, and every journey begins with a single step. But why is taking that first step, even a tiny one, the most important decision you can make for your financial future? The greatest teacher in investing isn't a guru, a financial report, or even a detailed analysis. It's putting your own money to work. It's about practical application, not just theoretical knowledge. The lessons learned from a live investment, no matter how small, are deeply ingrained because they come with real consequences and real insights into your own behavior. Imagine looking back a year from now, knowing you finally started building your financial foundation, taking control of your future instead of letting your money sit idle. What's truly holding you back from taking that crucial first step towards understanding how to make your money work harder for you? If this video sparked an idea, or if you found these real-world results insightful, please hit that like button to show your support. It helps this channel reach more aspiring investors. And in the comments below, tell me, what's the first UK stock you'd consider investing in and why? I'd love to hear your initial ideas. Don't miss future insights and practical experiments like this. Subscribe and ring that notification bell so you're always updated on new videos. Remember, true financial freedom isn't about getting rich overnight through some magic formula. It's about taking consistent, informed steps, no matter how small they seem at the beginning. It's about understanding that every pound you invest today is a seed for tomorrow's growth, a commitment to your future self. Picture a future where you understand your money, where you're actively building wealth, step by tiny step, gaining confidence with every decision. Your £1,000 or even £100 is more than just money. It's a powerful learning tool, a gateway to financial literacy and empowerment. Don't let fear paralyze you. The journey of 1,000 investments begins with a single pound. Take that first step.